You're watching the latest weekly CFD overview of the global financial markets. The ECB decided last week to extend quantitative easing for 9 months at around 30 billion euros a month, starting in January, as was widely expected. However, Mario Draghi emphasized it is an open-ended program. This detail and a more dovish-sounding Mr. Draghi pulled the euro lower against the dollar. The greenback has also been helped by preliminary news on much better than expected growth in the third quarter and the adoption of the US budget bill in Congress. The Bank of Japan kept its monetary policy steady on Tuesday, as widely expected, while slightly lowering its inflation forecast for the current fiscal year. The yen strengthened last week and traded at around $113.35 Tuesday noon. The British pound rose last week on better than expected UK third quarter GDP growth, as investors wait for the Bank of England's rate hike decision on Thursday. Markets expect the Bank of England to raise interest rates by 0.25%. Fed Governor Jerome Powell is likely to become the next Fed chair, rather than economist John Taylor, who is considered the most hawkish of the candidates. The Fed is not expected to make a rate hike this week, with markets putting odds at more than 90% that the next hike will come in December. Overall, the dollar was at its highest level in 3 months on Friday, on talk that the next chair of the Federal Reserve could steer policy in a more hawkish direction, and on hopes that Trump could push through tax reform. A report surfaced on Monday saying the House is considering a plan that would lower the US corporate tax rate gradually. This pushed down prices on the US stock market, but overall US equities rose significantly last week. Twitter, Amazon, and Microsoft all posted excellent quarterly results. The price of Bitcoin traded at record highs on Monday as investors appeared to shrug off recent negative news, a fork that created a new cryptocurrency called Bitcoin Gold. Gold prices were little changed last week, but exhibited moderate volatility. The price headed lower on Tuesday, as a dip in Chinese business activity raised questions about demand prospects. Crude oil prices rose last week above the $54 level. Ongoing speculation that OPEC and Russia will agree in November to extend output cuts beyond March boosted prices. You have been watching the latest weekly CFD overview of the global financial markets.